Namaste, welcome to Arthaniti. Today I want to talk about debts, loans. Now it is always said that having no debts is the best place one can possibly be in financially. But for most of us, to buy big budget items, say like a house, there is no other way but to take up a loan because of the costs involved. Correct? So most of the material purchases that we do are done on the basis of the borrowings that we take from a bank or a financial institution. But not all loans are good, like not all loans are bad. It is important that we are able to decipher between which is a good loan and which is a bad loan. Now, there is a simple rule, right? We have our credit cards, we swipe it day in and day out. It is a kind of a loan that we have taken, right? So a simple rule that one needs to follow to be able to understand which loan is a good loan and which loan is a bad loan is to look at the value addition, the purchase that you have done by taking a loan, the item that you have purchased, what kind of value addition is it doing in your life? Is it adding to your net worth? Now, what is net worth? Net worth is basically your total assets minus your total liabilities. So the item that you have purchased by taking up a loan, by taking up a debt, an obligation to repay, is it adding any value to your net worth? Is it adding any value to your life? Say an item, a big budget item like buying a house. Yes, it is definitely going to help you lift up your lifestyle. It is going to enhance your living experiences. Correct? So a loan taken for such an item can be classified as a good loan. Whereas if you buy consumables, if you are buying clothes or say a car, a mobile phone, which we splurge on, by the way, such items, no sooner that you buy these items, the value of these items start reducing, depreciating. You buy a brand new car and you take it away from the parking lot and the value reduces. How much are you going to pay? How much are you going to borrow to buy such items is a question that you should ask yourself. It depends on your financial well-being, your earning capacities. Correct? So before taking up loan, understand which is a good loan and which is a bad loan. Now, to give you a few examples of good loans, say a loan which is taken, as I had already explained, a loan which is taken to buy a house. Now, in a city like Pune, where property rates have skyrocketed, it is not the case only for a city like Pune, but most metro cities where jobs are concentrated, more jobs are concentrated, the property rates have become very high. Buying a house there is a humongous task for a salaried person or as well as for a businessman. Putting in his hard-earned money is not going to fetch him the kind of house that he dreams of staying in. So taking a little assistance from a bank or a financial institution will any day help such a person to buy that dream house. Correct? So a loan for property, say residential property or commercial property, which adds value over a period of time, the rates tend to increase over a period of time. Correct? Or you can stay in your owned property for a few years, let the rates increase, sell it off, buy a new property. But that is hardly what is done. One other way of earning money through property is by way of rent. But again, one has to understand that the rent, the return that you get by way of rent, and the return that you will get by putting in the same money in a different investment product, the rent returns are very on a very lower side than the returns other investment products, say like investment in an equity mutual fund, would offer you. So that is one thing that you should keep in mind. See, the value becomes positive, or the asset or the loan is a good loan when the returns that you generate from the item that you have purchased by taking that loan are higher than the interest that you are paying on the loan. Understand? When does the loan become a good loan? The returns that you expect from the asset, the item that you have purchased by taking up a loan, the returns are more than the interest you are paying on the loan. When such a thing happens, it becomes a good loan. Correct? One more example of a good loan can be loan taken for education. Now, all of us know the importance of education and how it changes our lives, right? The more educated you are, the more your chances of earning better in your jobs become, the more your chances of getting promoted also rise, correct? So any loan which is taken for, say, education or enhancing your skills, which is going to help you earn better in future, can be classified as a good loan. Now, coming to bad loans, as I already told you, items like your mobile phones. Now, every year there is a new launch by Samsung and Apple. What happens to the models that they have launched previously? The value of those models depreciates so fast that your money just vanishes into thin air. Correct? So, every time you go in for purchasing the latest mobile phones, please bear in mind to understand the utility of the phone. Are you utilizing the phone to the fullest? Do you really need a new phone? Is your old phone really not working the way you want it to, or is it just a, a show off kind of a thing that instigates you to go and buy every new launch that happens from companies, mobile phone companies? Correct. Now, that should be a priority when you think of taking up loans to buy such gadgets. Another thing, fancy cars. Now there are so many cars that run on the road, and new models are launched very new models are frequently launched. How soon do you change your car? Do you know the value depreciates as soon as you buy it? Take it home from the showroom, the value of the car starts depreciating. Plus, it is something that you park outside your house, which you use to commute in highly congested roads. And all of us know that if you live in a city like Pune, what happens to the cars, right? In the sense, with so much congestion on the road, some scratches and some little hits here and there are bound to happen. How much money are you going to invest in that car? Are you planning to take up a loan to buy that car? If that is the case, if car is really a necessity, say for your commute or for your family requirements, see to it that you take up a loan with the lowest interest rate available in the market. Why? Because you are paying, you are spending to use the car, and the value of the car is going to diminish faster than you think. One more thing that I want to stress here is items like, say, clothes and shoes. And every time there is a sale, say on an Amazon or a Flipkart or some sale at a nearby mall, we throng those places and buy stuff as if we don't have anything left to wear. And that is the way it is. The mentality has changed as such. I remember my grandfather saying that he used to have three pairs of shirts and trousers, and he used and the week used to pass by easily. But that is not the case. Weeks and weeks pass by before we repeat our clothes, correct? So again, buying branded clothes, preferring branded over non-branded items, something that we should ponder upon, the utility, the necessity, and the amount of money that we are spending on it. Something that we need to think of before we splurge on some items using our credit cards. Yes, credit card is a kind of a loan that we take to use the money for a month. If we do not repay the bill at the end of the month, a huge interest is going to get charged on our outstanding credit card amount. So when we swipe our cards left, right, and center, when such sales are announced, please think and rethink. Stop a little bit and then decide whether you really want to purchase that item, and is it really going to make any difference in your lives if you just leave it there and then, even if you like it, right? Something which needs to be pondered upon. See, loan is not bad. After all, you need money to make money. But careless taking up borrowings or carelessly taking up loans is going to end you up in a loop where from which it becomes very difficult to come out. So be careful, be mindful of what loan you are taking up, and be aware of your repayment capacity, be aware of your income streams, and the kind of loans that will be suitable to you to lead the lifestyle that you have been living till the time you take up that loan. Correct? Very, very necessary. Be mindful of your spendings, be mindful of your borrowings. That's it, a short video today to help you understand the necessity of loan, where to stop, when to stop, and when to give priority on what kind of loan that you take. Very, very necessary. I hope I have added a little value in your investment and financial journey. And please feel free to contact me on the WhatsApp number that I have given below, or leave a comment below the video, and I'll be happy to help you with your queries. Thank you. See you in the next video.